All right, welcome to the Explainer. Today, we're opening up the books for episode 5 of the GoldMining Europa trading documentary, and we are going to focus strictly on the metrics from week 23. We're going to break down exactly how this automated system actually performed out there, looking closely at the surface level wins, but more importantly, the hidden pressures lurking just beneath. So, let's jump right into the data. Just as a quick refresher for those of you tracking this dedicated EURUSD real cent account, this system launched with a baseline deposit of exactly 2,500 cents, which is roughly 25 US dollars. The whole philosophy here is pure systematic execution. No manual intervention, no emotional second guessing. It's just an automated strategy reacting to the market in real time. Let's unpack the dashboard for week 23 and see exactly what happened over these last 5 trading days. So, what's the big headline figure for the week? It's $2,548.62. That is our realized balance at the close of week 23, and it really represents this steady, methodical march upward. But in trading, the balance is really only half the story. While this number proves the system is actively banking profits, it also completely masks the intense underlying market pressure that the algorithm had to endure just to get there. This week is basically a textbook example of what we call the iceberg effect. Right there above the surface, shining in the sun, are those locked-in gains, a realized weekly profit of $22.56, which brings the weekly growth to 0.89%. Pretty good, right? But lurking beneath that surface in the active market, we saw a weekly floating drawdown that reached 8.24%. So while the system successfully closed out trades to build that balance up, it was simultaneously shouldering a really heavy load of active open risk. Okay, let's break down the exact mechanics behind those realized profits. The automated strategy fired off exactly 9 trades this week. It managed to pull in 34.16 cents in gross profit from the winning side, while absorbing gross losses of minus $11.60. The win-to-loss ratio held up nicely, carving out a net positive gain for us. And check out that average hold time, just over 5 hours and 39 minutes. The system was highly active, jumping in and out of positions within the exact same intraday session. Looking right at the terminal history, you can see the exact sequence of events unfold. Right in the middle is our standout victory for the week. It was a short position that captured a really massive 21.70 cents in just a single move. That one trade did a ton of the heavy lifting. But, of course, full transparency means we have to look at the bruises too. The system's worst single trade took a hit of 10.04 cents. Remember, this isn't some magical money machine. It's a statistical model taking calculated risks. Sometimes taking a hit is just part of the math. And this right here beautifully illustrates that iceberg tension we were talking about earlier. The balance line is stepping up smoothly and locking in at our high of $2,548.62. But follow that equity line, the true real-time value of the account if all open trades were closed instantly. Toward the end of the week, it takes this sharp, undeniable dive down to $2,049.34. The balance is secure, sure, but the equity is being squeezed incredibly hard by those open, negative trades. So why that sharp drop in equity? Well, to understand it, we actually have to look outside the code itself and into the macroeconomic storm brewing out there. The Euro-USD pair faced intense directional stress, mostly from a surging US dollar. This was really fueled by shifting Federal Reserve expectations, clashing head-on against a more dovish European central bank. Add in some sharp movements in treasury yields, plus the notorious volatility of non-farm payroll week, and you've got a perfect storm of heavy, sustained pressure working against the algorithm's positions. Check out how the algorithm navigated all that noise on the 15-minute time frame. You can see the exact entry and exit markers. As the price action cascades downward, driven by those intense macro headwinds we just talked about, the strategy absolutely does not panic. It doesn't pause to check the news. It just clinically executes its pre-programmed logic, entering and exiting without a single ounce of human emotion. Bringing it all back to the realized numbers, the spread is pretty clear, isn't it? We're looking at roughly 75% gross profit against 25% gross loss. And it's absolutely vital to emphasize this point. Despite the heavy floating drawdown squeezing our equity, and despite that brutal macroeconomic volatility, the systematic execution still successfully navigated the noise. On closed trades, it did exactly what it was programmed to do. It locked in a net positive gain. Let's zoom out for a second and look at the total lifespan since inception. we're sitting at a total overall growth of 1.94%, with our accumulated profit at 48.62 cents. Now, in a world full of hyperinflated online trading promises, I know these percentages might seem small, but this is what real, methodical, low-capital compounding actually looks like. It is a slow, steady progression upwards on the balance sheet. Our ultimate objective for the GoldMining Europa series is that long-term progression toward 10,000 cents. And reaching that milestone is absolutely not a sprint. It's a marathon of risk management. As we close the books on week 23, the system remains mathematically profitable overall. But that heavy floating drawdown is definitely the elephant in the room, and it's the key story we'll be watching heading into week 24. We've seen the locked-in wins today, but we've also squarely faced those open risks. So the big question is, will the algorithm have the strategic resilience to weather this macroeconomic storm? Or will the floating drawdown drag the equity down even further next week? We'll let the data decide. Thank you so much for joining me for this explainer. Until next time, real accounts, real risk, real progression.